The Ethereum merge just took place and it went smoothly, which is great for cryptocurrency. It's great for Ethereum. However, when we take a look at the Ethereum chart, it's dropping off a cliff. It's down 7% in the last hour. Why is this happening? What can we look forward to going forward? Was this overall good for Ethereum or is it actually bad? As Ethereum holders, it doesn't make a lot of sense to a lot of people why we would be at 1600 or 1700. Everything would go smoothly and then we fall off a cliff. I also want to talk to you about some things that I'm buying here today, some new positions I'm making, and also talk to you about what I'm doing going forward in crypto. If you don't mind hitting the like button, I appreciate that. I also want to say thank you to Margex. There's going to be a link underneath the video. We're going to talk about it a little bit later. I will have timestamps underneath the video as well if you want to skip around. So cryptocurrency is red here today. On the last 24 hours, Bitcoin is down 3%, falling under that $20,000 mark. Again, if we hold up at 19,500, I think that will be bullish for Bitcoin, but Ethereum is falling off a cliff, down 6% in the last 1 hour, 7% over the last 24 hours, 21% over the last 30 days. A lot of other cryptocurrencies down slightly too over the last 24 hours, between 1 and 5%. We also have the overall markets falling down pretty drastically here today, with the NASDAQ down over 1%, S&P over 0.5%, and the Dow just slightly red. Now, like I said, Vitalik announced this earlier. It's a big moment for Ethereum ecosystem where Ethereum goes from proof of work to proof of stake. It reduces a lot of energy costs. It allows people to actually want to hold on to Ethereum, or it makes people want to hold on to Ethereum because instead of just having to sell it to pay for the electricity to continue to mine it, instead of that constant selling pressure, you actually have people that want to hold it and accumulate it because they get more rewards for holding it. It's a snowball effect because they get staking rewards. So overall, it's great for the economics. It also has been great because we've actually burned. We're actually deflationary since the merge. We're actually down about 167 Ethereum. And it's not like this is a bull market. It's not like we have this crazy excitement around Ethereum right now like we did around EIP 1559. Of course, this is bigger actually than EIP 1559, but the whole market isn't having as many transactions. So this is really good to see 168 Ethereum just being deflated. And this shows that, hey, Ethereum really is going to be probably deflationary, especially once we get a little bit more volume. But we're still seeing a pretty bad market right now. And we're also seeing Ethereum fall down. So why is this happening? Well, first of all, I think we have to realize that overall Bitcoin's in a downtrend, right? A lot of cryptocurrencies just follow Bitcoin in the end. Of course, Ethereum has been doing really well versus Bitcoin, but overall crypto is just falling down in general. And that's likely due to the macroeconomic factors, right? We have a lot of macro factors. We have the NASDAQ down 15% or something from its high, maybe 20 or 25%. We have supply chain issues. We have a lot of fear over energy. There's a lot going on right now. And the Fed's raising rates too. I shouldn't forget that. So there's a lot going on. That's one reason, I think. But obviously, Ethereum is falling down pretty quickly right after this merge. It's pretty obvious that it's not just a continuous downtrend. It's really something that's happened recently because we're down 7% in an hour. I think you have to realize that a lot of the time after these big events, there is some selling. People bought getting ready for this event, and then they're getting ready to sell as soon as it happens, thinking that there's not a big, exciting event coming moving forward, right? Think about the next big event for Ethereum or cryptocurrency. It's pretty hard to lock something down. It's pretty much just whenever the macro changes. A lot of traders got wrecked over the last hour. 100 million traders, $100 million worth of trading, I should say. 60 million in Ethereum. Also, the Ethereum Bitcoin valuation was getting pretty high. If we look here, it's at 0.085 a few days ago, and this is almost the same as when we're in our bull market. Typically, everything sells off to Bitcoin, and Bitcoin dominance goes up during a bear market. I think there's no question we're in a bear market. So the fact that we were getting close to the highs of last year signaled that it was a little bit lofty, right? Getting ready for this merge, maybe we pumped up a little bit more to 2,000 or a little bit higher on Ethereum, but there's no question in my mind that we were going to sell off at some point. And that's what I've been saying in the last videos, that I thought we would see some kind of sell-off once the merge went through. Now, I do want to talk about what I'm doing going forward and my thoughts on this and a new position that I'm making here today. But first, I want to thank Margex. Now, a lot of traders are having a hard time making profits in this kind of market because it's so unpredictable. So how can you make profits in a bear market? Well, you can diversify your strategy by longing and shorting Bitcoin and other cryptocurrencies on something like Margex. Margex is a Bitcoin-based multi-asset trading platform where you can earn profits by longing and shorting positions even in falling markets. Bitcoin and other top cryptocurrencies are available on up to 100x leverage. There's no KYC, and it's also been nominated by finance magnates as one of the most user-friendly trading platforms. Margex also offers something called an MP Shield, which is a system that protects illiquidity and price manipulation that can often flash crash prices and cause people to be liquidated very quickly. Now, Margex is giving you an exclusive bonus to try leverage trading without any of the risk involved. All you have to do is sign up with Margex with the link in the description. Go over to the wallet section, use promo code FRIEND100, and you can get up to $100 of free funds to trade and start testing your trading skills. Every Margex user can trade Bitcoin, Ethereum, Litecoin, XRP, EOS, ADA, Uni, Sol, up to 100x leverage. The minimum deposit is only $10 and the minimum trade size is $1. Keep in mind that leverage trading does have risk. That's why you have to trade with small amounts that you're comfortable with. That's why, again, it's good to use that $100 of free promo code so that way you can try out your trading at first. You'll never see any hidden commissions on Margex and all deal indicators are on screen. Users can pick between cross margin and isolated margin for each trade. Cross margin shares the trader's available balance among all the leverage positions that use cross margin, either by using the pen or scrolling all the way to the left with the slider. Margex's trading fees are very competitive with other trading platforms, especially considering that MP Shield. And you can deposit a ton of different cryptocurrencies to start trading today, from Bitcoin, Ethereum, USDC, DAI, Tron, and Polygon, and even more. And then one last time, just a reminder, when you use the link underneath the video, you can use the promo code FRIEND100, confirm, and then you get that trading $100 for free to start trading today. So as I've been saying throughout the year, I'm really just buying Bitcoin with the exception of a few other really small, really risky cryptos. This year, like 99% of my money that's going into crypto is going into Bitcoin. So I am going to continue to buy Bitcoin. As I said, if we see Ethereum continue to sell off, I would be happy, very happy to be able to accumulate it. What I'm looking for is about $1,000, maybe a little bit less than that. I think it is really positive that the Ethereum 2.0 merge went through, but that doesn't mean that we can't sell off more, right? If Bitcoin's going to continue falling down or just stay sideways, Ethereum can definitely do that as well without some big catalyst moving forward. If we get around a $1,000 Ethereum, I will start accumulating pretty, I don't want to say heavily, but more heavily, obviously. I'll start buying it significantly, and if we fall down further, I'll buy more heavy. Now, we fell under about 900 during the summer back in June. We could definitely see that again. If we look at the Bitcoin valuation again, Bitcoin Ethereum valuation, if we fell back down to this range that we saw back in June, we would be around the same price, right? We would see about a 30% reduction in this Ethereum Bitcoin valuation. So if Bitcoin goes down another 5 or 10%, we would see Ethereum drop pretty drastically, and we would expect to see under $1,000 Ethereum. So I will really want to accumulate more there and then just stake it. Think about it for the long term. If we get back to highs, obviously in the next bull run, that will be a 5x, and most likely we'll get much higher than that. A lot of people are thinking that we'll actually flip in the next bull run. So that would be obviously very, very bullish. If we get under $1,000 Ethereum, let's take a look at what the market cap would be. It would be about $120 billion to surpass Bitcoin at the peak of even just last bull market. That would be about a 10x for Ethereum. It'd be around a $10,000 Ethereum, and that's not accounting for Bitcoin going any higher in the next bull run. Now, I'm not saying that Ethereum's necessarily going to flip Bitcoin in the next bull run, but I'm just saying those are some of the numbers there, and hopefully that makes sense. Hopefully that was clear. Again, check out the links to Margex underneath the video, and I'll see you in the next one.